Okay, great. I see yes from Jason and Daniel. Okay, great. And before the webinar, I'll give you a brief introduction of this organization. This webinar hosted by the International Data Engineering and Science Association. This is a nonprofit organization in California registered under the Regulation 501c. Our mission is to bridge the gap between academia and industry, and with our vision to foster the data engineering and data science ecosystem and broaden the adoption of their underlying technologies, thus accelerating the innovations data can bring to the society. We empower and nurture community growth by offering online resources, conferences, latest industry trends, and data-related job opportunities. And in the past 5 years, IDEAS has been organized about 20 conferences and over 100 meetups with a concentration in data science and artificial intelligence all over the United States with more than 5,000 attendees. And the industry covers the healthcare, fintech, retails, manufacture, and insurance education, and so on. Here are some photos or pictures from our events. Now we are welcoming more friends to join our community and with the expertise in data science and artificial intelligence or blockchain. If you want to share your thoughts and your ideas in our community, would you please submit your proposal to conference@joinideas.org. We'll be happy to make a time and for you on our weekend webinar. Okay, today we have Alex here, and he will give you a lecture with the topic of how security tokens change business forever. Alex is an author and faculty member and co-founder of Blockchain at UCLA, where the lectures on blockchain business applications and the security tokens, in addition to his role of managing director of 7CC Blockchain Investment. That's a company focused on supporting and fostering the blockchain industry. Alex got his MBA from UCLA Anderson School of Management and has developed training, marketing, and blockchain strategies for companies in the United States, Latin America, and Asia. Okay, now I will give the screen to Alex, and then Alex can share your screen and start your lectures.
Well, thanks, William. Really appreciate it. It's a pleasure being here. Hope everyone is having a great weekend. Let me try to do a screen sharing here. And that should be this one. Share screen. I'm going to go all the way back to the beginning. So, okay.
Okay, we can see your screen and can hear your voice. You can start.
So yeah, so I'll give you guys, we're going to talk about a lot of different things and potentially answer some of the questions that you might have. Here's the agenda. We're going to cover like smart contracts, utilities and securities, security tokens, tokenization of real assets, which is the backbone of security tokens, crypto asset classification in key markets, digital securities in the United States, and regulation around the world and the future. So, oops, sorry. So a little bit about me. My name is Alex Nascimento, for those of you who don't know me. Thanks, William, for the great introduction. So like William said, I teach blockchain, business applications, and security tokens at UCLA. And I do that as a part-time faculty where I have been teaching at UCLA for a little bit over than a decade now. And in 2017, we co-founded the UCLA Blockchain Lab, which is now called Blockchain at UCLA, is a student-led organization with over 300 members, sprawling across the entire campus. I got into the space basically by investing in tech in general. I'm part of Tech Coast Angels, and have been working with early stage tech firms for as long as I can remember. And then in 2016, started to invest in ICOs led by some of my friends who were in the Ethereum Foundation and introduced me to the opportunity. As I was teaching blockchain business applications, which is completely a non-technical course at UCLA. So it's a course for lawyers, business leaders, students, and so forth. Don't need to be a coder to go through the course. I found two things. One, that we wanted to teach students in general how they could use blockchain and tokenization to raise capital and build financial products stored in the blockchain or registered in the blockchain that were fully regulated and that were approved by bodies like the Securities Exchange Commission in the United States, well known as the SEC, as well as my day job is to run a company that focuses on helping blockchain companies find more capital, build better products, and really launch themselves into a successful path for an A round, a B round, C round, so forth. So for those of you who are interested, this is the book we wrote, is the STO Financial Revolution, How Security Tokens Change Businesses Forever. And it uncovers some of the great strategies we are going to talk about in this podcast, in this presentation, in depth. So I highly recommend you go through the book. The book is also available on Amazon. If you Google my name, STO, it will pop up. It's 99 cents. So all proceeds go to the UCLA blockchain group. But if you want to get it for free, you could get it on this URL and use the promo code STO book-ideas, all caps, and you can get the first edition for free. The edition that it's now on Amazon is updated and it has some new regulatory frameworks. So if you want to get the most updated one, go to Amazon, download the book for 99 cents. And if you like the book, please leave us a review. We'd gladly appreciate it. But that was my shameless plug. A little bit of what we do as a professional firm. We invest in security token projects and blockchain projects. We help companies and executives learn more about the space through educational programs and doing podcasts and educational efforts like this, as well as we serve to advisors to some of the largest projects in the space. We're working with all the way from large miners that are operating 700 megawatts plus mining capacities to blockchains that are gonna displace Ethereum. So pretty interesting project. If you have a blockchain project, feel free to reach out to me. It'll be a pleasure to chat with you about it. And go back. Sorry. Slide 5. So, okay, so before we start, a little bit of a disclaimer. I'm not a lawyer. You should get a lawyer if you're going to dabble into this space for your own safety and good. Be sure that you have a good lawyer so that you don't find yourself doing anything you should not be. So this is purely for educational purpose, and I'm not a lawyer. And anything said here, you should do your own research and find your own evidences. Right? little disclaimer that our corporate lawyers ask me to do all the time. So what is the big aha here of the blockchain, and why is this relevant for the financial industry, right? I like to use this graph here as an explanation. A blockchain allows you to create a single immutable file, just like a $100 bill has its unique identification number on it or serial number on it. You can create an immutable file. So as a metaphor, if I take a picture with your cell phone and then I send that picture to my group of friends on WhatsApp or Facebook, then all my friends now have a copy of that file. Now, with a blockchain token or a digital security stored on a blockchain, that cannot be done, right? You can create a single immutable file that cannot be copied. So in that metaphor, if I would take a picture of take a single immutable file in form of a picture and send it to my friend, then I would no longer have that picture. And now that picture resides in my friend's phone. And that creates a single immutable file that can be used as a vehicle of transaction, such like a $100 bill, which has its own unique number, and then you can give it away for exchange of goods and services, and you no longer have that $100 bill. Now it's with somebody else. So blockchain allows you to do that, and that's a big aha for the financial industry, because now you can not only create digital versions of this $100 bill, but you can also create digital versions of a variety of investment contracts. Mainly, every single investment contract out there can be represented on a blockchain and can be automated. Why do I keep doing that? Sorry for that. All right, so here's one concept, right? Where you're creating a representation of any kind of investment contract, that being a $100 bill. A $100 bill is an investment contract between you and the federal government who's issuing that $100 bill. So now you can create any kind of investment contract, store it on a blockchain, create it as a single immutable file where it could not be duplicated or double spanned. And you add a layer that was developed by Nick Szabos, which is the smart contract, which are automatically executed contract clauses. So different payout clauses, different voting right clauses, the different governance clauses, different rights of ownership clauses, and all the other clauses that are incumbent or natural to an investment contract can now be automated, right? And that gives an enormous power and reach to the financial industry. So here's a simple example of how a smart contract works. A smart contract would be a digitized version of a purchase of a house contract that would automatically execute when a buyer is matched with the seller and they exchange funds for the purchase of a house. Right? That deed of that house would be automatically cleared with a settlement house, and the ownership of the house would then be transferred to the new owner, and the digitized land deed would be stored in the local government agency. So all that transaction, which traditionally is done via heavy paperwork, can now be done by a computer. And if you erase that necessity for humans to be involved and paperwork to be used as a vehicle of transaction, then you can significantly scale up the reach of these investment contracts, as well as significantly decrease the costs. And we're going to go deeper into that specific concept. All right. Sorry for that. So There are two types of tokens, right? And I like to say this. You're going to hear a token from me and from a lot of different experts in the industry. What is a token? A token is a representation of anything stored on a blockchain, right? So think about as a token as a blockchain file, right? And if you have an investment contract that is digitized and stored on a blockchain, then you have an investment contract token. And that investment contract token traditionally has two shapes. One is a utility token, and second as a security token. A utility token is anything that traditionally would give you access to a product or a service. And here, metaphorically, we illustrate that with the old Disney dollars, which really had no fungible value outside Disney, but you could use it to access roller coasters, buy hot dogs at the station, really just gives you access to the world of Disney. On the other side, you have a regulated investment contract, which is a security token or a securities contract registered on the blockchain that can be automatically executed, right? And that being regulated by the Securities Exchange Commission of the United States, if you're American, that qualifies as a security token. And here we illustrate that concept and make the difference between utility and security by showing a Disney dollar versus an actual Disney stock. For those of you who are as old or older than I am, you will remember that at some point in history, you used to receive these paper certificates like the one here that represent the ownership of a share into a certain company. So this is one for Walt Disney before things starting to get digitized. So nothing more than a security token is an investment contract stored on the blockchain and regulated by local enforcement agencies. So how does a security token works? Security token is fairly simple, right? Like I said, is an investment contract regulated by securities law. That securities law being American, Swiss, Brazilian, French, Japanese. It really doesn't matter. As long as it's regulated, it has the stamp of approval from the local jurisdiction and securities law enforcer, and it's represented on a blockchain, you have a security token. And that security token can represent a real estate investment contract, a derivatives financial product, a debt structure product, an equity, or even utility tokens that were launched as ICOs previously, but are now considered security. And it's interesting because the SEC, which is the Securities Exchange Commission of the United States, deems almost all these tokens as securities, because at some point they have an interest of the buyer as an investment. And as long as there is an interest qualifying an investment, then it is security. So traditionally, how this process would work is that a company issues a digital security, right, token, which is a representation of value such as stocks stored in a blockchain. Investors on a second step all around the world have the opportunity to purchase that investment contract or that representation of a share. So think about Facebook in the early days, as people started hopping into the platform, people would be able to buy a security token from Facebook or an early stage share of that company. The beauty of creating a security token as opposed to paper contract is that every record of transaction is stored on a blockchain, easily auditable, everybody can see it, and you have a paper trail of who owned that security over the life of that security, how much it was paid out. Certainly a lot more transparency than we currently have in the financial industry. And the blockchain provides this ownership information and how this token transfers from one person to another. Remember that it's only one single file. So it's one single file represents one share, and then whoever has that file is the owner of that company share. And then obviously it allows the company with, or the issuer of the token, with the advent of different blockchain protocols, to create smart contracts that can do automatic payments, that can do automatic voting rights, then can automate the management of this client relationship, which traditionally is so time consuming and costly. So what are some of the things that can be tokenized? Some of the things that can be tokenized or represented on a blockchain are real estate, shared ownership to tokens, right? So if you think about the real estate project, one that is big, and I don't know, it's like a 50-story building in Las Vegas, just to make things interesting here, right? How many people in traditional markets have access to that kind of early stage investment? Very few. But if you have a security token, you can blast that on the internet and reach a much wider number of people and fractionalize to the endless decimal how much you want each fraction to be worth. You can also do equity to tokens in startups. So as startups are trying to raise money, a lot of our clients are doing that. So if you have a startup idea and you're looking to raise money, please hit me up on LinkedIn. You could raise money and swap money for equity, assuming that those equity contracts were security tokens. Then that person who purchased the security token from you, the issuer, ends up with a better scenario because now they can sell the token on the secondary market, right? Mature companies are also an example of this. A lot of people ask me, oh, I don't have a startup. Can I take advantage of this? And for sure, yes, you can take advantage of this. Let's say someone has a chain of 10 pizzerias. You could raise money, do sidecar investments, create debt structures into your business, and then sell that token to your customers who really love your pizza. Or you can be like a chain of hotels or any other thing like that. Traditionally, what you're doing with a security token is placing a digital version, and this is important, a digital version of a traditional investment contract for buying shares of any company, say it, Amazon, Walmart, Vaughn supermarket, any Nike, anything like this. When you buy a stock from them, they give you an investment contract to sign. And obviously most people don't read it because they're just interested in buying the stock, but it's still there's a lot of compliance that hurts the market. And this keeps going back to that slide. Sorry. And then the other interesting aspects that tokenization works for is in the energy business, where a unit of energy, being it oil, solar, hydro, whatever it is, has a value, right? And then you can tokenize that value and redistribute it. You could also do interesting ideas, exotic ideas, like a collection of art could be tokenized, and then you can buy 1/1000 of a Picasso, and every time that piece of art gets sold, you get your share. And you also can do it for funds, limited partner ownerships to tokens. So people that invest in a certain fund that has a theory can invest in tokens directly into their fund. Okay, oops. So important here for us to cover, and I'm going to try to leave like, 10 to 20 minutes for Q&A, is what is the security token ecosystem? And because it's a security, because it's a regulated securities offering, it has to abide to the current regulatory framework of the SEC. So there are 6 different buckets or 6 different providers that provide services into this industry, which are necessary for you to issue your own security token. Let's say you have a chain of pizzerias and you want to issue digital shares of your pizzeria and pay people dividend. You could certainly do that with a security token and raise money for your chain of pizzerias. So the first one is custody and trust. Most institutional investors are only going to invest in a business that can provide a trustworthy custodian of that asset. What I usually joke about in my classes is if you go to a private equity firm or a VC firm who's investing in crypto, who are they're gonna trust to hold the private keys to that digital wallet? Is it gonna be the intern, who's probably the most tech-savvy person in the team? Or is it gonna be the late executive, elder executive who's not very familiar with how digital wallets work? So traditionally, you need a custodian. You also are going to need legal services all the way from the beginning to the end. Fisher Broyles or DLA Piper are good firms here in the US. I would lean more as a suggestion to security lawyers than any other type of lawyers, because you end up, or what you don't want to have is an infringement of securities law. The rest is pretty much basic. Any lawyer could help you. Then you have an advent that you don't have in traditional markets, which are issuance platforms. These are software houses and platforms that will create your token, meaning they will represent or create a image reflex of your contract stored on a blockchain with automatic execution of certain clauses. You could look at Swarm, Republic, Polymath. Polymath is one of my favorites. Just an amazing company. And then you're going to have to list that token on a digital platform. We have digital platforms in the United States like T0, Open Finance, and you also have other ones coming around the world. There's GBX and Gibraltar. And these are trading platforms just like your E-Trade or any other, securities trading platform that allows you to buy and sell shares. And what you're doing here is buying and selling security tokens. Then in the United States, for you to sell security tokens in a primary issuance or raise the first round of capital, traditionally you need a broker-dealer, who's someone who has all the proper licenses to advise you into how to sell or buy your securities, right? And then we have Propeller and Coinbase. I think Propeller now is called Atomic, but still in the same space. And sixth but not last, you need to do KYC and AML. For those of you not familiar, KYC stands for Know Your Customer, and AML is anti-money laundering on all the people that are holding your security token. You as an issuer, you are responsible for this. But this is not an easy task. So you can find different service providers like Verify Investor or NetKey that are going to charge you a few tenths of a dollar to run each different KYC and AML into different people and validate them as legitimate actors, not someone who's going to build a security token and run away with your money. So what are some of the key benefits of security tokens? Certainly cost reduction, much faster settlement and compliance across intrabanks and financial institutions. A recent study from Goldman Sachs estimates that Goldman spends about $6 billion a year only in back office costs. And imagine if now all your security token contracts are all automated, right? And those clauses are being run by a computer algorithm. Then that $6 billion becomes a lot less. just by default. You also have the ability to do revenue sharing and dividend payment. This shocks people when I talk about this, but in the United States, where there are thousands and thousands and millions of businesses, only about 3,000 of them pay dividends to their shareholders. And why is that? It's mainly because it is a lot of paperwork to pay dividends. And a lot of paperwork means low productivity into other areas as well as costs. So that $6 billion that is estimated by banks to run a daily operation could be significantly reduced. You also have startup fundraising through STOs. Like I mentioned before, you can create a share of your startup and raise money via a security token. The security token holder will traditionally see less risks of redemption. So for example, if now I want to get out of one of my startups, I'm going to have, by contract, have to hope that that startup is sold before my contract expires. Or my other option is to convince one of my investor friends to buy that share for me, which is kind of, kind of like challenging because you're going to go to your friends and ask them to do you financial favors. That usually never sets too well. But if you can list it on the exchange and someone on the other side of the world can buy it, then why not? Right? That makes a lot of sense. As well as risk of redemption. If you want redemption in your fund or investment product allows redemption, then you're going to have to call someone and you're going to have to get approval and you're going to have to spend 2 hours on the phone. With a potential redemption from a crypto smart contract, that could be done in a click of a button. All right. You also have advantages of secondary liquidity, which are the big paradise that everybody's dreaming of, so that I could issue a security token and then eventually throw it on an exchange that had a lot of secondary trading. And these people on the exchange will continue to trade my token back and forth, hopefully raising the price of my token organically. You also have 24/7 markets, and blockchain traditionally facilitates the transfer of ownership. As you're trying to find the transfer of ownership, you can utilize a blockchain to know who owns that security at any given point. And we saw that happen in 2008 when mortgages were being bought and we sold deep levels into the financial infrastructure where you wouldn't know who really was holding your bag or holding the keys to your house at the end of the day because there was so much trading going on. So definitely blockchain allows for that facilitation of transfer of ownership. Here's an interesting graph as it kind of points out some of the key regulatory jurisdictions in the world and how do they see Bitcoin and Ether, how do they see altcoins, how do they see stable coins, and how do they see security tokens. Obviously, in the United States, Bitcoin and Ether are considered commodities. In Japan, they're considered already currency of law. You could go into a big drugstore like Walmart in Japan and pay it everything you bought with Bitcoin. It's pretty impressive there. We also have Singapore, who has a framework for STOs under securities law, including past ICOs and stable coins. And you also have a space for you to carve your idea as being a commodity, like Bitcoin or Ether. In Europe, most of it is country specific. And Brazil, you have mostly utility tokens being traded with a non-security token, which are investment contracts represented on blockchain that fall outside the local regulator classification of securities. One example is public debt. So public debt in Brazil is considered a non-security. Assets in Switzerland are also very pro-crypto, or regulators are very pro-crypto, classifying mainly 3 types of tokens. You got utility tokens, you got stable coin tokens, you got or asset-backed tokens, or you got security tokens, which are tokenization or real assets. And then you also have a variety of other countries, which I'm going to touch upon, that have different jurisdictions. But just wanted to give you guys a little bit of the background history of security token ICOs to STOs. So in July 2017, when we were in the infancy stages of the Ucla Blockchain Lab, the DAO scandal came along, which raised the attention of the SEC, who started looking at this with a little bit more of a granular look. Right after, in December of 2017, we had the Munching Scandal, which was this guy that was raising funds and on a blockchain via a token. And this token was considered unregistered securities offering. And they created the Munching test, which is now being used to define what is a security token and what is not as a digital representation. And I'll kid you not, I think if you pair the Munching test with the Howey test and some other tests that the SEC is using, you will find it almost impossible not to classify your project as a securities offer. Then on September 2018, Bitcoin was deemed as a commodity. As we continue to evolve in that space, places like Paragon and Airsoft were projects that raised a significant amount of money and then ended up settling with the SEC for their conduct of issuing an unregulated securities offering. That kind of like from, let's say, February 2018 onwards was a little bit of a dark place in crypto where prices were low. There was a lot of insecurity as to what the SEC was going to say and so forth and so on. But in July 2019, actually on July 10th, the SEC approved 2 token offerings that can be sold to the general public under Reg A+. I'm going to cover that very briefly. It allows people to do security tokens and sell at 21 in the United States. Also in November 2019, Ether was considered a commodity, and in January 2020, companies like Polymath were already jumping the hoops to create platforms to make it easy, the issuance of security tokens. Some of these companies today include NASDAQ. NASDAQ has a full-fledged solution to issue a security token if you're interested. So still, the market is on its infancies, but what are the main problems and opportunities? The problems still lie on the lack of liquidity. Secondary markets are the promised land for STOs, meaning that you could sell your security token or digital security into a startup in the secondary market to a person you don't know who it is. As long as that person is approved and whitelisted, you could sell that. But those exchanges are still in flourishing, so we should see more of them this year. But the opportunities are great. So there's a 70 trillion global equities market. There is a 92 trillion bonds market, which the US represents about 40% of those markets. And there's 4.1 billion global internet users who can certainly get access to these investment opportunities and exponentially grow the pie of alternative investments worldwide. If you don't believe in me, here's a slide with a couple of different security token news. Red Swan and Polymath are going to tokenize $2.2 billion in high-end real estate. The largest Latin American investment contract is doing token partnerships with Tezos. Liquify, which is a platform for tokenizing real estate assets and real assets, is partnering with Amazon Web Service. T0, who's potentially going to be the biggest security token exchange in America, is about to roll out 200 different tokens. Lithuania has guidelines on security token offerings. So this wave is real. And it's real because institutional players are coming in. Here's a little bit of a timeline of what has been happening. Like I said, in 2019 was a big year for security tokens. Investment bank, Swiss bank Julius Baer is now accepting crypto clients. Lately, we just saw last week Chase Manhattan supporting Coinbase and Gemini as crypto businesses. In May 2019, the Chicago Mercantile Exchange future tradings of Bitcoin contracts surpassed the daily trade of Bitcoin. So there are more transactions going into what is the future price of Bitcoin than actually daily trades. We've been seeing Fidelity Digital Assets work on their crypto custody solution since 2014, and then rolling it out in September 2019. Pension funds are now putting money into blockchain funds, backed, which is a New York Stock Exchange product, is also helping customers transact cryptocurrencies. Silvergate Bank, which is a crypto-friendly bank, is publicly listed on the New York Stock Exchange. And Tezos Blockchain is looking to provide grants of $37 million to develop the ecosystem. So here's, I think, that one of the most important slides of this presentation. And I'll try to zoom through the rest of it to leave time for questions. If you think about issuing a security token, which is a regulated token offering, one of the best places in the world is to do it in the United States. And that mainly is because during the Obama jurisdiction, there was an amendment that's called the Jobs Act, which stands for Jumpstart of Our Business. I joke with my students that it has nothing to do with Steve Jobs. It's literally Jumpstart of Our Business. Was an amendment that would help entrepreneurs issue securities for their startups in a less bureaucratic way, right? And mainly there are 3 exemptions. These exemptions are just like less paper-heavy ways of issuing securities for your investment opportunity. So I'll start with the first one. So if you want to issue a security token, you could issue it under Regulation CF or Regulation Crowdfunding. There's an exemption that it's pretty easy to comply with. You just fill out some forms. You basically don't even need a lawyer. You could raise up to $1,070,000. And then now in the next 60 days, the SEC is going to bump that up to 5 million. So you can raise up to 5 million with a security token. Obviously, the people who buy your security token in this Reg CF exemption need to hold that security token for 12 months. But after that, they can sell it to anyone in the secondary market. We also have Regulation D, which stands and well known as Regulation D 506C. And that allows advertising of SEOs as long as you sell only to accredited investors. And you could raise as much money as you want. There's another variation of that called Regulation D 506B, as boy, which doesn't allow you to advertise. Some companies like to do that to minimize their potential liabilities. Some others don't. The lockup is still 12 months for first buyers, but you could raise endless amount of funds as long as you raise it from accredited investors. And then Regulation A is the highest tier of these exemptions, which allow you to, Regulation A plus, which is the second tier of Regulation A, originally allowed you to raise up to $50 million, 50, every year from anyone. Anyone. Doesn't need to be an accredited investor, it can be anyone. And now that's being reviewed in the next 60 days. The new amendments from the SEC is gonna bump that up to $75 million. So really an increase in that. So if you have any questions, I welcome you to reach out to me. I'll very glad to explain you how this works. You could issue a security token in the United States and raise money for your startups without much of a problem. Here are some regulatory frameworks around the world. In the United States, everything is considered a security. In Canada, there's no difference between utility and security. Uh, in Cayman Islands, you could do a tokenized fund, which we have done for a lot of our clients. We're now opening like 4 funds for 4 different clients in the Cayman Islands. So there is a um, vast array of options for security tokens around the world. I'm not going to go too deep into this. You guys can keep the slides. Ideas is going to, and William is going to have the slides. Happy to share it. You can download the book. On the back of the book, there is the last chapter. It's a section with detailed legal frameworks of each jurisdiction. In the European Union, it's basically a country by country. Liechtenstein is very friendly. France, just the Supreme Court of France just deemed that Bitcoin is currency and it's a fiduciary form of investment. You have Estonia, you have Australia, Gibraltar, Switzerland, very friendly. Malta, very friendly. Germany, although securities law do not allow the issuance or transfer of values, they have been issuing security tokens under their BaFin regulatory model. China is definitely a place where security tokens are a no-no, but Thailand is very friendly. Malaysia, very friendly. Hong Kong, very friendly. Cambodia as well. Japan just last week issued a series of guidelines for issuing security tokens, and like I said, you could use Bitcoin to buy groceries in Japan. Philippines also has an economic zone that is very friendly for security tokens. Singapore is one of the biggest markets. We've worked with a lot of clients in Singapore, opening funds there. South Korea, interesting space. Saudi Arabia has been doing some blockchain-based transactions as tests. Mauritius, South Africa. And what do I see the future being? I think that the future of this, the later part here of the year, we're going to see blockchain institutional products, a lot more clear regulatory frameworks, interoperability between security tokens, and a lot more security token exchanges. We are actually issuing that structure with the largest token exchange in Latin America, and looking to push that that token into 5 or 6 different security tokens worldwide. The potential of security tokens, in my opinion, tend to be overestimated in the short run, but underestimated in the long run. And I think that that's why it's going to revolutionize the financial industry. And my piece of advice here for those of you who are looking into that is obviously hire a lawyer, but be really careful, because the most important thing here is that if you issue a security token, no matter which jurisdiction you're working in, you are responsible for keeping track of who are your shareholders. And that's where I would really make sure I'm focused at if I were you and looking into issuing a security token. Again, here's our book. We have a survey before you get the book. It's just 5 questions, takes less than 3 minutes. Highly recommend people to take it. It will help us figure it out. What are people's interests in security tokens and where the industry is going, and will give us great insights for the book, which is constantly being updated. We're updating the book every 6 months. We're coming out with the 3rd edition, which is going to have case studies from UNICEF and other great organizations. So really welcome you guys to check it out. Here's my information. Again, where you can get the book for free with the coupon code, or you can get it on Amazon for 99 cents, and all the proceeds go to UCLA. And with 5 minutes left, I would like to thank you all for this opportunity of sharing here, and open it for 2 questions.
Okay, thank you, Alex. Thank you for your professional share. And for our attendees, if you have any question, you can input at our Q&A, and Alex will be here for 5 more minutes to answer your questions.
We got a couple of questions here. Daniel asked, how does this work with state regulators, legal ownership? So the beauty of security tokens is that, this is a great question, Daniel. The beauty of security tokens is that it follows every existing regulatory framework that already happens for traditional transactions. So let's say you want to buy a house, right? Or you want to invest in a commercial building and you want to fraction that commercial building. That security token will abide to all the legal jurisdictions of state and federal. Now, what you're doing and what the benefit is that it's a lot cheaper to manage 1,000 different investors that are holding security tokens that are automated. So you can do dividend payments, revenue shares, transfer of ownerships, all those things that if you're going to have 1,000 different shareholders in your commercial real estate investment opportunity, it becomes extremely paper heavy, bureaucratic, and expensive. So the ability of significantly minimizing that and reaching way beyond your network of investors because you're on the web, so anybody could buy your security token, is really the advent. But to your question of how it works with state regulators and legal ownership, it works just like it would work with any other paper contract. Then we also have another question here from Jason. What's my opinion about Libra? I think Libra is an interesting product. I think, my opinion, I've been to the Libra hearings in Washington. I think it's going to go through. I think that there is a lot of support from large institutional players to support Libra. And potentially as we go into a competition between the Chinese crypto yuan and the American version of the digital dollar, which was first introduced now in this COVID situation, maybe Libra would be speed launched, let's say it, right? But I think it's an interesting product, and I think it will make it easier for people to adopt crypto and potentially will impact positively in the price of Bitcoin. And then we have an anonymous attendee here that asked the question as well is, when do you see the lack of liquidity being solved? Which is a fantastic question. So currently, so what would be the problem with lack of liquidity, right? Lack of liquidity is basically tied to one single thing. This is a new technology. It's a technology that has been being tested since, I'm going to say, 2018, early 2018. So we have a little bit over than 2 years where people are kicking the tires of this. And people are developing security token exchanges, just like crypto exchanges. Difference between a crypto exchange and a security token exchange is that a crypto exchange is unregulated. So you don't need, in the United States, you don't need an ATS license. You don't need a broker license. You don't need to KYC and AML every single client of yours in there. And for a security token exchange, because it is regulated, let me put my video. Oops. Oh, yeah. Because it's regulated, you need all these licenses. So it's a little bit more tough to implement these token exchanges, security token exchanges, but they are being implemented. T0 is a great example. They're buying a handful of broker dealers so that they could sell securities all over the United States. They have a few ATSs licensed in the pipeline. So now we got to the problem. What is the problem of liquidity? problem with liquidity is that companies are building these exchanges, but think about it metaphorically as a nightclub, right? I can go and I can build a nightclub and put amazing sound system, top shelf alcohol, amazing service, great decor. But if I don't have clients coming into my nightclub, I don't have a nightclub. What I have is a good stereo system and a good empty bar. So that's kind of like the chicken and egg problem that's being solved. And as the technology gets more familiar and more projects come along utilizing this technology, you're going to see an influx of people. So you also have like a 12-month lockup on the first issuance of primary capital for these security tokens, which eventually when this 12-month period ends, then I have a security token, I want to sell it. I'm going to start calling my friends and say, hey, you can get my security token at this XYZ exchange, or go to T0 and get my security token there. And then as people get more familiar and start participating in this environment, liquidity will be solved. If you ask me, I think it's kind of like a 2-year horizon. Sorry. And then Daniel asked here a question. Does your company have its own platform to issue and manage tokens, or do you act solely as a consultant? Great question, Daniel. So what we do is that we advise clients. We use usually third-party vendors that do the issuance, do the broker dealers, and those so forth. So we help companies put those together. If you want to reach out, find me on LinkedIn, send me a note. I'm more than happy to talk offline about some of the services, but we helped over like 20 different projects to date with a good hit rate of success, and in multiple jurisdictions, including Cayman, the US, Singapore. So it kind of depends on what you're trying to do, but we can help you navigate through the ecosystem and partner with the right service providers. Well, I guess we're at the top of the hour here. Thanks everyone for the great questions and for tuning in on this Saturday. It is a pleasure to be here, William. Anytime you need me, just let me know. Hope everyone is safe and warm and this Saturday at home. And really look forward to, when this is all over, participating in the next live event of Ideas, which is a truly fantastic company and organization. And I really appreciate you guys having me.
Okay, thank you, Alex. Thank you so much for your time and your information shared with us. And our webinar will be continue next weekend, and all the attendees can visit our website to register the next webinar. And in the future, if you have the opportunity, we definitely want to invite Alex come back to share more your ideas. Okay, thank you so much. Thank you for your time and enjoy your weekend.
Hope everyone has a great weekend. Bye-bye.
Bye.